So imagine a multi-million-dollar corporation, but this corporation is entirely run by teenagers.
Right?
And the primary currency isn't, stocks or bonds or crypto. It's candy bars, car washes, prom tickets.
Oh, yeah. The big money.
Exactly. And they're making all the business decisions, right? They're deciding vendor contracts. They're handling literally thousands of dollars in loose cash every single week. But here is the terrifying kicker. While the teenagers are the ones running the show, the legal liability, I mean, the actual career-ending, potential criminal fraud charges, those fall squarely on the shoulders of the adults in the room.
It honestly sounds like a premise for like a really stress-inducing television drama.
It really does.
But that is the literal everyday reality playing out in public schools across the country right now. I think people usually think of school fundraising as this quaint little bake sale, you know? You sell a cupcake, you put $1 in a cigar box, and you buy some new library books. But we are actually talking about a highly regulated, incredibly fragile financial ecosystem.
And navigating that exact ecosystem is our mission today. So welcome to our deep dive into the high-stakes labyrinth of student body accounting. And I should note right up top, this presentation is brought to you by James Marta and Company LLP, who are just the absolute pros at helping schools navigate these incredibly complex audits and accounting challenges.
That's really are. It's a massive topic.
It is, and we're going to unpack it all together. So whether you're a school principal or a district bookkeeper, maybe a teacher who got roped into running the yearbook club, or just someone who wants to understand the hidden mechanics of how public institutions function, this is for you. We are exploring what these student funds actually are, the ironclad rules governing how the money moves, and why, making a mistake with a shoebox of car wash cash can quite literally end an educator's career.
Yeah, because the most important paradigm shift you have to make right now at the very beginning of this conversation
Yeah.
is realizing that this is not bake sale money. These are public funds. The moment a dollar crosses the threshold of a public school campus as part of a student activity, it becomes governed by the state's education code. We're talking massive regulatory frameworks like Title V in California and stringent local district policies. You are stepping into an environment that just demands strict, unyielding compliance.
Think back to when you were in high school. You probably remember a very stressed out history teacher constantly hounding you for the $20 you owed for, like, the Model UN trip.
Oh, absolutely.
And you probably thought they were just being annoying, but by the end of this conversation, you're going to realize that teacher was fighting for their professional life. So let's start at the bedrock of all this. What exactly is an ASB, and who is actually pulling the strings?
Well, ASB stands for Associated Student Body. In legal terms, it's a recognized organization of students within a public school. But the key phrase there is recognized organization. The fundamental driving purpose of an ASB is extremely specific. It exists to promote the general welfare, morale, and educational experiences of the students.
Okay, so it's all about the kids.
Exactly. It's an entity that exists solely for the students. It's designed to give them a space for fundraising, participating in school culture, learning leadership, and really experiencing the mechanics of running what is essentially small business.
But in preparing for this, I came across something that completely shattered my understanding of how schools work. Because I always assumed having a student council or an ASB was just a legally mandated part of being a public school, like having
Yeah.
a cafeteria or a library. But it's not, is it? I mean, schools do not legally have to have an ASB.
Not at all. Under the Education Code, the local governing board, so the elected school board, has the absolute authority to approve the formation of a student body organization. And the inverse of that power is that they have the absolute authority to abolish it.
Wow.
Yeah, having an ASB is a privilege granted by the board. It's not a constitutional right of the student body.
Wait, really? So if a high school's ASB is just a total mess, let's say they're constantly failing their financial audits, or a massive amount of cash goes missing from the homecoming dance, the school board can just drop the hammer and pull the plug on the whole thing.
Exactly. And some districts have been forced to do exactly that. When you have a situation where there are continual, severe non-compliance issues, where internal controls are just non-existent, or where fraud has occurred, the governing board has a fiduciary duty to step in.
That is wild.
Yeah, as a last resort, they will dissolve the ASB, they will freeze the accounts, they stop all student fundraising and shut down the organizations. The legal and financial liability to the school district simply becomes too high to let the teenagers keep playing business.
I just can't imagine the uproar from parents if a school board just canceled all clubs and dances because the accounting was bad.
It's a nuclear option, certainly, but it really highlights just how serious the financial oversight needs to be. The board is legally on the hook.
Okay, so assuming the board does allow the ASB to exist, which is obviously the case for most schools, how does it actually function day to day? Because a second grader selling wrapping paper is a very different operational beast than a 17-year-old class president negotiating a DJ contract for prom.
You've hit on the exact reason why these organizations are legally bifurcated. They are split into two distinct categories based on grade levels and the capacity of the students to govern themselves. You have unorganized ASBs and organized ASBs.
Okay, break those down for me.
Let's look at the unorganized ASBs first. This framework applies to elementary schools, K-8 schools, adult education, special education programs. In these specific environments, the students do not govern the organization. There generally aren't formal individual clubs with their own bank ledgers or a primary student council making complex financial decisions.
Which makes sense. You can't ask a 7-year-old to project the profit margin and tax implications of a cookie dough fundraiser.
Right, exactly. So, in an unorganized ASB, the principal or a specifically designated school employee steps into the role of a trustee. The adults are the ones making the financial and operational decisions entirely on behalf of the students. The core rule still applies. The money must be spent to benefit the students, but the students aren't the ones steering the ship.
I see. So an unorganized ASB is functionally like a legal trust fund. The principal is the trustee making the investment and spending calls for the benefit of the kids because the kids are legally and developmentally incapable of doing it themselves.
That's a highly accurate mental model. The adults hold the power and the liability simultaneously. Now, contrast that trust fund model with an organized ASB. This is the ecosystem you find in middle schools, junior highs, and high schools.
Where things get complicated.
Very. Here, the students actively govern. This is where you have a primary student council. You have individual clubs like the robotics club or the drama club, complete with their own student-drafted constitutions and their own distinct budgets. The students are holding formal, minuted meetings. They're voting on which fundraisers to run, and they are voting on exactly how their money is spent.
Sticking with the business models, an organized ASB is much more like a startup incubator. The students are the CEO and the board of directors making the actual business moves, proposing the ideas, taking the risks. And the adults in the room are essentially the venture capitalists and the corporate lawyers, just making sure the kids don't accidentally break federal law or bankrupt the company.
I like the incubator analogy because it highlights the dynamic tension. The students are empowered to make the decisions because it's their money they raised, but the adults act as the ultimate safety net. The adults are advisors and, crucially, legal co-approvers. Because even though the student acts as the CEO, the ultimate legal liability, the risk of an audit finding, still rests squarely on the district.
That dynamic tension is fascinating. The kids have the steering wheel, but the adults are the ones who go to jail if the car crashes. So let's look at who is actually in the car. We need to map out the cast of characters required to run one of these organized ASBs safely. Let's start at the top of the food chain.
At the absolute top is the governing board of the school district. They are the ultimate authority. They set the overarching district policies. Below them, you have the superintendent and the district business office, often led by a chief business officer. Their job is to execute the board's policies and provide the structural framework. But there is a very specific, somewhat counterintuitive financial relationship between the district and the ASB operations that you really need to understand.
Right, because my immediate assumption would be that if the ASB is a self-funded entity raising hundreds of thousands of dollars through ticket sales and car washes, they would pay for their own operational overhead.
It's a logical assumption, but it's entirely wrong. Yeah. The district itself, using general taxpayer education funds, not the ASB's money must pay for the ASB bookkeeper's salary. The district must pay for the specialized accounting software. The district must purchase the bolted-down, fireproof safe.
Hold on, why? If the high school ASB has $100,000 sitting in their account from Friday night football concessions, why doesn't the ASB pay the bookkeeper who manages that money?
It comes down to a fundamental accounting principle: independence and the mitigation of fraud risk. Think about the psychological pressure. If the students are paying the bookkeeper's salary out of their car wash money, there's an inherent massive conflict of interest.
Oh, wow. I didn't even think about that.
Right. The bookkeeper needs to be an independent agent of the district. They have to be the person who enforces the rules.
Yeah.
If their literal livelihood depends on the students running enough profitable, possibly corner-cutting fundraisers to cover their salary, their objectivity is totally compromised.
That is wow. The bookkeeper has to shut down an illegal fundraiser, but doing so means they might not make rent that month because the ASB won't have enough money to pay them. That's a classic fraud triangle scenario.
Precisely. You are putting the employee in an impossible ethical bind. By forcing the district to assume these overhead costs, you maintain strict, independent oversight. The bookkeeper answers to the district business office, not the 17-year-old ASB president.
That makes perfect sense. Okay, so that's the district level, providing the infrastructure. Let's zoom into the site level. Who are the actual human beings walking the halls, dealing with the daily chaos of high school?
The apex at the site level is the principal. They are the ultimate on-site authority and the district's primary representative. Even in an organized ASD where the students are fiercely independent and voting on their own budgets, the principal holds the veto pen. If the students vote to do something unsafe, illegal, or against board policy, the principal must step in and shut it down. Then, working directly beneath the principal, you have the ASB advisor.
This is the person actually in the room with the kids, right? Like the one running the student council meetings.
Correct. And there is a critical legal requirement here, mandated by California's Title V regulations, which is the massive code of regulations governing public education. The ASB advisor must be a certificated employee. In practical terms, this usually means a credentialed teacher or a school administrator. Their job is to guide the students, oversee the integrity of student elections, review the budgets, and provide direct, continuous adult supervision.
So you can't just hire a really enthusiastic parent volunteer or a classified staff member like a campus security guard to run the student council.
No. It must be a certificated employee because the state views the ASB as an extension of the educational curriculum. It's a learning environment and therefore requires a credentialed educator to oversee it. But the real friction, the day-to-day battleground, belongs to the next character, the ASB bookkeeper.
Ah, the unsung hero of the entire operation.
Unsung hero, and without a doubt, one of the most stressful, thankless jobs on a school campus. The ASB bookkeeper is the financial gatekeeper. A lot of people mistakenly think this is just a data entry gig. They picture someone sitting in a back office, blindly typing handwritten receipts into QuickBooks while listening to podcasts. But that is not what this job is. A good ASB bookkeeper operates as a site controller.
I was reading through the documentation, and the manuals specifically note that the bookkeeper must have the backbone to reject improper deposits or reimbursements. They have to be willing to be the bad guy.
They have to be the ultimate no person. Let me paint a picture for you. It's 3:3 p.m. on a Friday. The head football coach, who is a local legend, beloved by the town, and has a huge ego, storms into the ASB office. He just bought $800 worth of specialized practice equipment on his personal American Express card because the team needs it for the playoffs tomorrow. He slams the receipt on the desk and demands the bookkeeper cut him a reimbursement check from the ASB football club account immediately.
Okay, so what does the bookkeeper have to do?
The bookkeeper has to look that furious, legendary coach in the eye and say, "No, I cannot reimburse you. You did not get this pre-approved." Because if the bookkeeper caves to the pressure and writes that check, they're the one violating the internal controls. They are the one who will be flagged in the audit, and their job is on the line. They are the human firewall between the school's operations and a devastating audit finding.
That sounds miserable. I can only imagine the psychological toll of constantly having to police your own colleagues. But you mentioned something crucial just now, the pre-approval. And this brings us to the students, the final piece of the cast. How do the kids actually fit into this approval process?
In an organized ASB, the student council is the authorizing body. They formally authorize the creation of new clubs, they approve the master budgets, and most importantly, they must approve expenditures before a single penny is spent.
Okay, I really want to dissect the mechanics of this because it sounds insane in practice. Let's say the high school science club wants to buy a $300 3D printer. You're telling me the 15-year-old club treasurer has to vote on it, the certificated science teacher has to approve it, Andy, the school principal, has to sign off on it, all before they can click buy on Amazon.
That is exactly what I'm telling you. It is legally mandated by Education Code 48933B. In the accounting world, it is famously known as the three signatures rule. Before any ASB funds can be obligated or spent, you must have three distinct signatures of pre-approval on a formal purchase order: a representative of the student organization, the certificated ASB advisor, and a board designee, which is usually the principal or a vice principal.
So it's a literal separation of powers designed to slow everything down. You cannot write a check without the kids, the teacher, and the administration all looking at the piece of paper and agreeing in writing ahead of time.
It forces transparency. Think about the logistics of what you just described.
Mm.
The science teacher can't just order the 3D printer from their couch on a Sunday night. They have to physically find the 15-year-old student treasurer during passing period on Tuesday. They have to explain what the printer is for. The student has to agree, sign the purchase order, and document it in the club meeting minutes. Then the teacher signs it. Then they put it in the principal's inbox. Only when all three signatures are logged in can the purchase be made.
And if they don't do that, like what if the teacher just buys it and says, oh, I'll get the kids to sign it tomorrow, no big deal.
If you buy that 3D printer with your own credit card and then submit the receipt to the ASB bookkeeper without those 3 prior signatures, the ASB legally cannot pay you back. As the auditors like to say, congratulations, you just brought the school a 3D printer out of your own pocket.
Oh man, which brings us right back to the furious football coach. He didn't get the 3 signatures, so he just bought $800 worth of equipment for himself.
Exactly. And the bookkeeper's job is to enforce that reality, no matter how much the coach yells.
This perfectly tees up our next major question. Now that we understand who has to sign the checks, we need to understand the boundaries of what they are actually signing off on, because the rules on what ASB money can buy are surprisingly rigid.
Extremely rigid. Every single time an ASB wants to spend money, they have to run the proposed purchase through a core legal test. It's essentially a 4-part checklist. 1, does the purchase comply with overarching board policy? 2, does it directly promote the general welfare, morale, and educational experience of the students? 3, is it an extra that the school district shouldn't already be legally providing? And 4, this is the one that trips people up, do the current students who raise the money actually benefit from it?
Let's focus on that 4th point. So you can't have a situation where the class of 2024 works their tails off raising 50 grand, but the ASB advisor decides to hoard it in a bank account for 6 years to slowly build a new stadium bleacher.
You cannot. The fundamental philosophy is that the students who generated the funds should enjoy the fruits of their labor. If a group of middle schoolers washes cars in the hot sun for 3 weekends to raise money, you can't bank that money for a future generation. It needs to be spent on the current student body.
Okay, so what passes this 4-part test? What are the safe zones for spending?
Allowable expenditures are usually pretty straightforward. Extracurricular activities, dances, and proms. Field trips are allowable, provided you ensure no student is excluded simply because they lack funds. Club supplies, like specialized wood for the woodworking club or stage makeup for the drama department. Student awards, trophies, and graduation ceremonies. Those are the areas where the money is intended to go.
But the list of prohibited expenditures, this is where I see administrators getting into massive trouble.
The prohibited list is vast, and it largely centers on preventing the district from using student money to cover the district's own legal obligations. You cannot use ASB funds to pay teacher salaries or substitute teacher pay. You cannot buy core curriculum textbooks or standard classroom whiteboards. And you absolutely, under no circumstances, can use ASB money to repair district facilities.
Let me throw a hypothetical at you. Let's say the indoor soccer club is practicing in the gymnasium. A kid kicks the ball too hard, it shatters a massive, expensive window in the gym doors. It's the soccer club's fault. Can the ASB soccer account pay to fix the window they broke?
No, emphatically no. Facility maintenance and repair is a district obligation funded by state taxpayer dollars. The ASB is not a slush fund for the maintenance department. Furthermore, you cannot use ASB funds to buy items for the personal use or convenience of district employees.
Give me some examples of that, because I feel like this happens all the time.
It does happen all the time, and it's always an audit finding. You cannot use student car wash money to pay for a staff appreciation luncheon. Yeah. You cannot buy the principal a retirement gift. You cannot buy a Keurig coffee machine or a microwave for the faculty break room using ASB funds. The core test fails immediately, right? A coffee machine for the teachers does not directly promote the educational experience of the students.
Okay, I track all of that. It makes sense.
Yeah.
But I have a scenario that I think challenges this logic. Let's say the kids in the high school Key Club, a community service organization, run a massive fundraiser. They raise $2,000. They hold a formal meeting with minuted notes, and the kids unanimously vote to donate that $2,000 to the Red Cross for hurricane relief. The kids want to do it. The certificated teacher agrees. The principal signs off. 3 signatures acquired. You're telling me they legally cannot write that check to the Red Cross?
In almost all circumstances in California, they legally cannot write that check.
Really?
Yes. And to understand why, we have to look past the school rules and look directly at the California state constitution. This brings us to a massive legal doctrine known as the gift of public funds.
The Constitution. We're going from a bait sale to constitutional law.
We are. Article 16, Section 6 of the California Constitution prohibits the state legislature, and by extension any local government agency, like a school district, from making any gift of public money to any individual, corporation, or charity. Remember our very first paradigm shift. ASB funds are public funds. They belong to the district.
Okay, let me make sure I understand the mechanism here. The state collects taxes from citizens. The state gives that tax money to the school district to educate children. The Constitution says you cannot take that taxpayer money and just arbitrarily gift it away because the taxpayers didn't consent to giving their money to the Red Cross. They consented to funding a school. And because the ASB operates under the district's tax ID, their car wash money is treated with the exact same constitutional rigidity as state tax dollars.
You nailed it perfectly. Giving public school funds away is a gift, even to a universally recognized noble charity like the Red Cross, is constitutionally prohibited. This also applies to giving cash awards to students. You can't just hand a student a $100 bill from the ASB account as a reward for getting good grades. You can't make donations to a local family whose house burned down. You cannot gift public funds.
But hold on, I know for a fact that schools do charity drives all the time. Canned food drives, penny wars for leukemia research. How is that happening if it's constitutionally banned?
It comes down to exactly how the money is handled. There are very narrow exceptions and procedural workarounds. For instance, if a district's governing board passes a highly specific written resolution declaring that a certain charitable donation serves a distinct public purpose for the educational benefit of the students, it might clear the legal hurdle. But the much more common and safer method is a direct drive.
What does that look like mechanically?
The students can organize the event. They can market the penny war. But when people donate, they must write their checks directly to the Red Cross or the Leukemia Foundation. The school merely acts as a physical collection point, gathering the envelopes.
Ah.
What the school's ASB cannot do, and this is the fatal error, is deposit all that cash and all those checks into the school's ASB bank account, commingle it with the drama club money, and then have the ASB bookkeeper cut a single giant ASB check to the charity. ASB accounts are strictly not pass-through accounts.
So once the cash crosses the threshold of the ASB safe, it is trapped. It gets absorbed into the public fund ecosystem, and it must be spent on the students.
Precisely. Once it hits the ASB ledger, it's public money, and the gift of public funds doctrine locks it down.
Man, if it is this bureaucratic and difficult to spend the money, we need to look at how they legally collect it in the first place, because there are some incredibly strict rules around student fees that I think parents and even teachers fundamentally misunderstand.
The rules around raising money are arguably even more stringent than the rules for spending it. And again, we look to the foundational laws. In California, this is anchored by the Free School Guarantee, which is rooted in the state constitution and explicitly codified in Education Code 4901. The premise is absolute. Public education in California must be free, period. There is zero tolerance for a pay-to-play model.
Let's translate that into the real world. What does pay-to-play actually look like on a high school campus?
It means you cannot charge a mandatory fee for a student to join the debate club. You cannot charge a $20 filing fee for a student to run for student council. You cannot withhold a student's diploma because they didn't pay a library fine. And you certainly cannot charge a registration fee to enroll in a summer school class. If a program is educational, the district must provide it free of charge.
What about physical education? Because I distinctly remember being in junior high and having to buy a very specific, terrible gray gym uniform with the school logo on it. My parents had to pay for that.
That is a classic battleground. Under the current interpretation of the law, a school cannot mandate that students buy standardized gym suits if their failure to do so is beyond their control, like if they simply can't afford it. And the school absolutely cannot dock their PE grade for not wearing the exact school-branded shorts. Similarly, you cannot charge a student for workbooks or art supplies. If an art class requires specialized clay to pass the curriculum, the school district must provide the clay. You cannot force the student to buy it.
I imagine this causes massive headaches for schools. I mean, if they can't charge the kids for the clay and the district budget is slashed, the art teacher has no supplies, are there literally any allowable fees a school can charge?
There are a few very specific exceptions carved out by law. You can charge a fee for an optional field trip, but there is a catch. You must provide an alternate, equivalent educational activity on campus for the students who choose not to go or can't afford it. You can charge fees to replace lost or damaged district property, like if a kid loses a textbook or smashes a school iPad. And you can charge for certain optional, non-credit community service classes. But the default assumption must always be that public education is free.
So, if the football team needs new helmets and the drama club needs new lighting, and they are legally barred from charging the students a fee to participate, they have to fundraise. And when I was reviewing the source material, there's one specific piece of paperwork that every auditor and manual highlights repeatedly: the revenue potential form. Explain this to me, because it sounds like the bane of every teacher's existence.
The revenue potential form. If you are going to run any kind of fundraiser in an ASB, this form is mandatory. It is the ultimate internal control. Think of it as a rigorous business plan that must be completed before you are allowed to sell a single item. Let's use a classic example, selling tubs of frozen cookie dough.
A staple of the American educational experience.
Right. Before the chorus teacher orders the cookie dough, they must fill out this form projecting exactly how much inventory they intend to buy. Let's say 500 tubs. They project the unit cost, how much they are paying the vendor. They project the sale price, say $10 a tub. And they calculate the expected gross revenue and the net profit. That is the potential part. Then the fundraiser happens. Afterwards, the teacher must complete the second half of the form, reconciling the actual cash received against that initial projection.
Okay, I was trying to think of an analogy for this earlier. It's essentially like a supply chain manifest for an auditor. You can't just count the money at the end of the day. You have to track the inventory from the warehouse to the customer to prove that nothing fell off the back of the truck.
That is a brilliant way to conceptualize it. It is a supply chain audit.
Right.
If you don't have that form, the ASD bookkeeper just receives a Ziploc bag with $3,000 in cash from the chorus teacher. The bookkeeper deposits it, everyone is happy. But the auditor comes in 6 months later and asks, wait, you bought 500 tubs of cookie dough. At $10 a tub, you should have $5,000. Where's the other $2,000?
Did the dough melt? Did the football team raid the freezer and eat 200 tubs? Or did the teacher pocket $2,000?
Exactly. Without the revenue potential form establishing the baseline expectation, there is no way to measure the shrinkage. There's no way to know if a crime occurred or if it was just bad salesmanship. If an auditor asks for the revenue potential forms and the school doesn't have them, it is immediately flagged as a severe failure of internal controls.
And that concept of missing cookie dough and missing cash leads us perfectly into the darkest, most stressful part of this deep dive. What happens when these systems break down? Because the environment we are describing sounds incredibly fragile.
The ASB environment is arguably the highest risk financial area in a school district. Let's look at the structural vulnerabilities we've discussed. It is highly decentralized. You have dozens of little club accounts operating simultaneously. It is managed by non-accountants, drama teachers, football coaches, and 16-year-old kids. And most dangerously, it is heavily reliant on physical currency. We are talking about literal shoe boxes and tackle boxes full of small bills and coins moving around a chaotic high school campus.
It is a perfect recipe for theft, loss, and disaster.
Which is why the FCMAT manual, and for our listeners, FCMAT stands for the Fiscal Crisis and Management Assistance Team. They are essentially the state's financial SWAT team that comes in when a district is failing. The FCMAT manual explicitly uses the phrase, a career-changing decision.
That is a chilling phrase to see in an accounting manual.
It is meant to be chilling. Mishandling these funds, bypassing the 3-signature rule, ignoring the revenue potential form, or losing cash isn't just a slap on the wrist. It's not a needs improvement on your annual performance review. It can result in immediate termination. It can result in the state revoking your teaching credential, ending your career in education forever. And if the missing money is substantial enough, it results in outright criminal fraud and embezzlement charges.
That is terrifying. So if I am a teacher or a principal or a bookkeeper, what are the crucial, non-negotiable internal controls I need to implement to make sure I don't go to jail?
It all comes down to breaking the fraud triangle, removing the opportunity. First and foremost, regarding cash. Cash must always be double counted. Immediately after an event, like the end of a Friday night football game, 2 different people say the athletic director and the student treasurer must sit down in a secure room, count the cash together, agree on the total, and both sign a receipt verifying the amount. One person should never, ever be left alone with uncounted money.
So no throwing the cash box in the trunk of your car, taking it home over the weekend, and counting it on your living room floor while watching Netflix.
Absolutely not. That is how careers end. Once counted, the funds must be sealed in specialized, tamper-evident plastic bags. These bags have unique serial numbers. If someone tries to rip it open to take a $20 bill, it leaves a permanent void message on the plastic. That bag must then be placed immediately into a heavy, fireproof safe that is physically bolted to the floor of the school.
The logistics of this are intense.
They have to be. Furthermore, timely deposits to the actual bank are mandatory. You cannot leave a tamper-evident bag sitting in a desk drawer for 3 weeks. And when it comes to the bank accounts themselves, checks must never ever be written out to cash. That is a massive red flag.
What about the spending side of the controls?
We circle back to the 3 signatures rule. No expenditures can be made without a pre-approved purchase order. You cannot buy balloons for the winter formal with your own money and ask for reimbursement later without prior authorization. The controls only work if they are applied before the transaction occurs.
Okay, let's talk about the auditors. Because throughout this whole conversation, they sound like the bogeymen waiting in the closet. How do they actually catch these things?
Independent external auditors are required by law to scrutinize the ASB as part of the district's annual comprehensive financial audit. They don't look at every single receipt that would take years. They do sample testing. They will pull a random selection of purchase orders and look for those 3 signatures. If one is missing, it's a finding. They will ask for the revenue potential forms for the 5 biggest fundraisers. If they aren't there, it's a finding.
What else are they looking for?
They look closely at the club ledgers for negative account balances. This is strictly forbidden. If the chess club has negative $50 in their account, it means the ASB bookkeeper paid a bill for the chess club using the money sitting in the debate club's account. That means one club essentially borrowed public money from another club without authorization. That's a huge violation. Any of these findings require the district to submit a formal corrective action plan to the state, detailing exactly how they will fix the broken controls.
I'm just reflecting on the human element of all this. It sounds like the district is taking an incredibly enthusiastic art teacher who just wants to inspire kids to paint and suddenly demanding they act like a forensic accountant for the FBI. How does a normal educator survive this environment?
It is a massive, often overwhelming burden. And this highlights why the district business office cannot just be a passive observer sitting in an ivory tower. They must provide continuous, mandatory training. They must create clear, plain English procedural manuals for all staff. You cannot expect a history teacher to innately understand public fund accounting principles, the gift of public funds doctrine, or supply chain inventory reconciliation without robust, ongoing sympathetic support from the district level.
Okay, so I am putting myself in the shoes of a parent listening to this. A parent looks at all this bureaucracy. They look at the 3 signatures, the revenue potential forms, the tamper-evident bags, the bolted safes, and the threat of a career-ending audit, and they throw their hands up and say, forget it. This is way too hard. We parents will just form our own group and raise the money ourselves, completely outside the school's control.
And that exact sentiment brings us to the final major hazard we need to discuss: the relationship between the ASB and outside parent groups. We have to draw a hard, impenetrable legal line between associated student bodies and what the state calls school-connected organizations.
When you say school-connected organizations, you mean booster clubs, the PTA, the PTO, educational foundations.
Exactly. You have to understand the fundamental legal difference. An ASB is a legal arm of the school district. It operates under the district's tax ID number. It is subject to the Education Code and the gift of public funds. A booster club, or a PTA, on the other hand, is an entirely separate, private 501c3 nonprofit organization. They have their own legally incorporated board of directors, their own IRS tax ID, and their own private bank accounts.
So legally speaking, the PTA is not the school.
They are not the school. They are a private entity that exists to support the school. And because they are 2 entirely separate legal entities, the absolute golden rule here is the rule of commingling. You can never commingle the funds.
Explain how commingling happens in reality.
It usually happens innocently. A parent runs a bake sale. Half the proceeds are meant for the PTA, half are meant for the student council. The parent just hands all the cash to the ASB bookkeeper and says, "Can you just deposit this and write the PTA a check for our half?" No, absolutely not. ASB money cannot be put into a Booster Club bank account, and Booster Club money cannot be deposited into the ASB bank account. The accounting streams must never cross.
I'm trying to picture how these 2 groups interact then. Let me try an analogy. ASBs and PTAs are like 2 neighbors sharing a property line. You both want the neighborhood to look nice. The PTA neighbor can throw a bag of high-quality fertilizer over the fence as a gift to the ASB neighbor. But the PTA neighbor cannot walk into the ASB's house, open the ASB's fridge, and start dictating what they cook for dinner. They are 2 separate households.
That is an excellent analogy. The interaction between the 2 is strictly regulated. A booster club can absolutely donate money to the ASB for a specific purpose. Let's say the band boosters write a $5,000 check to the ASB to buy new sousaphones. That is the fertilizer thrown over the fence. However, and this is where well-meaning parents get incredibly frustrated, once that check is deposited into the ASB account, it legally belongs to the ASB.
The neighbor threw the fertilizer over the fence, and now it's the school's fertilizer.
Exactly. The booster club parents cannot then march into the principal's office and dictate exactly which vendor the ASB must use to buy the instruments. They cannot demand to sign the purchase orders. The students in the district now control that money, and it is immediately subject to all those strict education code rules we just spent an hour discussing, including the three-signature rule and the bidding requirements.
I notice in the case studies there is a massive legal trap mentioned regarding this separation. What happens if a teacher, trying to be helpful and avoid all the ASB bureaucracy and three-signature delays we just talked about, just walks down to the local Chase Bank and sets up a high school science club checking account under the school's name?
That is perhaps the most dangerous scenario we've discussed. That is a massive liability and completely illegal. A district employee cannot unilaterally set up an unauthorized off-books bank account using the school's name or the district's tax ID.
Because it operates completely in the shadows.
Exactly. It completely bypasses the district's internal controls, the principal's veto power, and the board's oversight. The auditor can't audit an account they don't know exists. If a teacher does that, they are essentially operating a rogue financial entity. When, not if, but when the district business office finds out about that account, it can absolutely result in termination and an immediate fraud investigation.
You cannot hide public funds in a private account. Wow. Okay. We have covered an immense amount of ground today. Let's summarize this incredible, stressful journey we've been on. We have established that an ASB is not a simple bake sale. It is a highly regulated, student-focused financial ecosystem operating with public funds. If you are running an organized ASB, you are bound by the three-signature rule, forcing students, teachers, and principals to agree before spending a dime. You have to navigate strict adherence to allowable expenses, remembering the constitutional ban on the gift of public funds. You need ironclad cash controls, double counting, tamper-evident bags, bolted safes, and revenue potential forms to prevent career-ending audits. And finally, you have to maintain a massive, impenetrable firewall between public school funds and private parent booster funds.
And the ultimate takeaway from all of this complexity is that ongoing training is not just a best practice. Because the legal liabilities are so severe, continuous training for principals, advisors, bookkeepers, and even the student council members is absolutely essential for survival and compliance. You simply cannot wing it when it comes to student body accounting.
Before we wrap up, I want to leave you with a final thought to mull over. As we move further and further into a cashless society with kids using Apple Pay, Venmo, digital wallets, and whatever financial tech comes next, how will the classic shoebox of cash at the car wash evolve? Moving to digital transactions might solve the missing physical cash problem and make the auditor's life slightly easier, but it is going to create an entirely new, complex frontier. We are going to have to develop new cyber controls, digital vendor approvals, and electronic audit trails for the next generation of teenage CEOs running these student bodies.
That is exactly the next great challenge for district business offices. The technology of how the money moves will change, but the underlying fiduciary duty to protect those public funds remains exactly the same.
We hope this deep dive helps protect your school, your students, and your own career. Remember, when you are looking at a financial system run by teenagers but legally borne by adults, clarity, transparency, and strict internal controls are your best friends. If you have any questions about navigating the intense complexities of student body accounting, please reach out to James Marta and Company LLP. Conceptually flashing that logo one more time. They are the experts, and they are here to help you build the procedures and training you need. Because at the end of the day, we don't want teachers worrying about going to jail over a cookie dough fundraiser. We want the financial landscape to be as clean, transparent, and legally sound as possible, so the kids can get back to doing what they do best, learning and leading.